Good morning. Welcome to Stock Market Today. It's Friday, January 17th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. And just a quick programming note, there will not be a show on Monday as the market is closed in observance of Martin Luther King Day. But let's get into it. U.S. equities closed higher on Thursday. All sectors were positive on the day, with tech leading on strength in the semiconductor industry. Industrials and consumer discretionary also outperformed. Energy and consumer staples lagged the broader market. Treasuries were weaker across the curve. The dollar was stronger against the yen and the euro. Gold finished down 20 basis points, and WTI crude closed up 1.2% on the day. As we get to the desk this morning, S&P futures are up 20 basis points in Friday morning trading. Asian markets were mostly higher overnight, led by Japan and Australia. European markets are stronger as well. Treasuries are mixed, with the curve steepening. The dollar is higher against the euro and little changed against the yen. Gold is up 40 basis points, and WTI crude is adding on another 60 basis points to get us going on a Friday morning. Let's look at the structure of the S&P 500. Record highs as technology leads on strength in the semiconductor space. We're going to bump up our near-term support levels to the 3,200 to 3,250 range, and we are still looking for resistance levels to form. Remember, as I've been saying, with the market at all-time highs, there's no natural price-based resistance. RSI is in bullish ranges. It is now overbought at a reading of 74. To me, that's momentum confirmation to the trend as well. Chaikin money flow is bullish. So the indicators line up with the strength in price. Futures are pointing to a higher open here this morning. RSI holding bullish ranges, becoming overbought. That's a sign of positive momentum. So we continue to stay the course here. You know, are a lot of people starting to make the argument that we're a little overdone to the upside? Yes, they are, but who are we to say when the trend ends? That's why we manage risk. Continue to focus on leading areas of the market, bullish and very bullish stocks that are outperforming the market, and try to get them when they are oversold. Let's talk about our market in a minute. What are we writing about today? Well, further new highs for the major market ETFs. IWM, 52-week high. SPY, all-time high. Qs, all-time high. FanMag propels growth higher versus value. FanMag is Facebook, Amazon, Netflix, Microsoft, Apple, and Google. Small caps hold relative support. Semis continue to consolidate a strong relative move, and futures do point to a higher open today. We're going to look at a lot of those charts a little bit later on in the show. But first, let's look at the major averages from a power bar perspective. The Dow added 89 basis points yesterday, bumps the power bar ratio back to even, 6 bulls to 6 bears. S&P 500 up 82 bips. 137 bulls to 49 bears there. NASDAQ slight outperformer, 28 to 4 bulls to bears for the NASDAQ. Qs went out, as I said, at a new all-time high. And small caps, the IWM, new 52-week high, following a 1.28% move to the upside yesterday, 722 to 174 bulls to bears for small caps. Bonds downtick, sending yields lower. Tech was your leading sector on the day, up 1.34%, 25 bulls within tech, 0 bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks have become strongly bullish. Major markets across the board are mixed. Let's look at our stock of the day now. Euronet Worldwide, IT services stock, has a very bullish Chaikin Power Gauge rating. Closed at 162.80, down 20 basis points yesterday. That very bullish rating is a function of very strong earnings performance, attractive financial metrics, and positive expert activity. Does have some weak technicals of late, but when we take the 20 factors, 5 in each of these 4 categories, crunch the numbers, we come out with a very bullish rating for a stock that's in a strong trend, above the rising long-term trend line, and in a strong industry group. IT services has been strong of late. Now, when we analyze the chart, we can see the rating recently turned bullish, but the stock remains an underperformer relative to the SPY. Now, what I will say is that the intensity of underperformance has been diminishing of late as money flow has remained persistently bullish since the October timeframe. Stock is overbought. What I think we want to look for here is a move out of overbought conditions and a continuation of improvement on a relative basis before getting excited on Euronet Worldwide, ticker EEFT. I think we're going to add it to a bullish watch list today and watch how developments unfold. I think there were better opportunities out there in the IT services space. You don't necessarily have to jump on a name that's underperforming the market, but I think you do want to pay attention to it, because if we do begin to outperform, all else being equal, this becomes an interesting idea. Add EEFT to a bullish watch list here today. Let's take a look at our sector tracker now. Movement of the major sectors over the last 5 days, and it's kind of interesting to me because with the market pushing to all-time highs and some frothy sentiment out there, over the last 5 days of trading, it's your bond proxies that are outperforming. REITs and utilities both up more than 3% over the past 5 days. That's largely a function of the stalling out in the near-term uptrend in the 10-year yield. However, it is interesting. Defense at the top and then tech. Tech's been our favorite area of the market. Materials, healthcare, staples, and comms are middle of the road, all higher over the past 5 days. Industrials higher. Discretionary and financials also higher, but towards the bottom of the list. And there's energy, refusing to get going, refusing to outperform the market. Even when oil was spiking, energy just could not get much traction to the upside, which brings us to our industry in focus, because it is kind of interesting. And what I'll say is this. I mean, if you are predisposed, which I do not advocate, but if you are predisposed to going bottom fishing in the market, and you're going to look within the energy complex, at least look in the E&P space, which we'll look at today, as opposed to the services space, which we looked at yesterday, because at least the oil and gas exploration and production services industry group has a bullish power bar ratio, 11 bullish or very bullish stocks for 7 bearish or very bearish stocks. However, the group does remain an underperformer as it's lagged the S&P 500 by over 14% over the past 6 months. It's currently ranked number 17 of 21 subsectors. It's moved up 1 slot over the past week. So like I said, if you're going to go bottom fishing and you're predisposed to owning energy, you want to look for the beaten down area of the market that could rebound. Not a view that I advocate, by the way, but I realize we all have different perspectives on the market. At least look here. At least look in the E&P space. Look at names like Southwestern Energy with a bullish rating, or Gulfport, GPOR, with a bullish rating, or Valero, VLO, with a bullish rating. Let's take a look at the group as a whole, though, and this is why I can't get behind that strategy, right? First and foremost, XOP has a neutral rating. Now, the trend is strong as it's above the long-term trend line. Money flow is turning up here, and this is an interesting development. Fund is oversold, but this is what keeps me at bay. Persistent underperformance on the part of these groups relative to the broader market makes it hard for me to get excited about it. So maybe the tide is turning. Maybe this power bar ratio hints at a potential change, but I'm not there yet, right? But at least remember, yesterday we looked at services, complete disaster. At least this group has a bullish power bar ratio and some bullish money flow. Look here rather than there if you are predisposed to owning the lagging areas of the market. But XOP, it's hard for me to get excited until we start to see some outperformance on the part of this group. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Morgan Stanley pops following better than expected earnings. No real news on Fox A to drive that one higher by 4.35%. Consumer discretionary was strong yesterday. That took Capri along for the ride, up 4% for that neutrally rated stock. Schwab actually announced an earnings miss, but the stock rallied 4%. That's why getting earnings is hard, right? They missed, stock rallied. Right? You have to get sentiment right. You have to get positioning right. Not the easiest game in town. Align, no real news there. I do note that the JP Morgan Healthcare Conference is ongoing. That stock higher by 3.99% on the day. Loser side of the board, Bank of New York, down 7.8% following their earnings announcement. PPG, earnings out yesterday, stock down 2.5%, but I will note there was some positive commentary by R.W. Baird in a note to investors today. BIIB down 2.37%. Didn't see a lot of news there. Same with HP, down 1.76%. Energy was weak yesterday. HP goes along for the ride there, down 1 3/4. INFO Caught an upgrade yesterday. Investors didn't care. Took the stock lower by 1.6% on the day. Let's dive in now. It's Friday. Today's the day we look at the relative key themes and relationships, a lot of relative strength work that I do on Fridays in my note to Chaikin Analytics clients. And the first one that jumped out at me was that small caps held relative support. Here's the IWM relative to the SPY, small caps relative to large caps. Downtrend below the declining 200-day moving average for the majority of the past year and a half. But now what we're seeing is a bit of a stabilization, right? We made a low, rallied, pulled back to retest it, tried to rally again, another pullback to start the year, holds the low. RSI gets down near oversold levels, starts to rally with price. Now, what I will say is that on these rally attempts, it has not been able to become overbought, right? So it's hard to say that momentum has shifted to the upside just yet, but it's something we're watching. What I would love to see is for IWM on a relative basis to take out the 200-day moving average and then take out these September highs to signal that the trend is changing. Now, remember, this is a relative trend. This is relative to the broader market. On an absolute basis, the IWM still looks strong since breaking topside through 160. We've been highlighting the 175, 176 area as a likely upside objective for the fund, and that does remain intact. So it's kind of, we want to see if small caps can continue to build this base here and then start to break higher on a relative basis. The absolute trend still looks good. To me, that's a sign of strong breadth in the market. We talked about it yesterday, but more and more areas in the market that are breaking to new highs, whether they be all-time highs or 52-week highs, that signals that breadth in the market is strong. So on an absolute basis, small caps look okay. On a relative basis, they need some time to build this base. We want to see them take out those September highs before really getting excited about a potential trend change. Where we do see a possible trend change taking place is in growth relative to value. So we started to highlight this last week, and it's ongoing this week. Growth continues to lead value to start the year. Here's the Vanguard S&P 500 Growth ETF relative to the Vanguard S&P 500 Value ETF. And you can see we've broken topside through this first resistance and the 200-day moving average. So now some work to do with this consolidation. RSI of the ratio, series of higher lows, and is now broken to overbought levels, signaling that there is positive momentum here. And that's playing out, right, with the Qs breaking out relative to the S&P 500, right? So we've been talking about the Qs. We've been highlighting them. I said earlier that the fan mag was starting to break to new highs. That's Facebook, Amazon, Netflix, Microsoft, Apple, and Google. I can't take credit for the creativity around the name. I heard it mentioned as I was listening to Bloomberg Radio, but I think it's interesting. It just shows you that in the large cap space, growth is strong to start the year, and it's those big popular names that we all know that are breaking higher as a group. So just something to keep in mind as growth continues to lead value to start the year. Remember, growth was a big outperformer relative to value, and then in September it started to fade, and now we're rallying back. We'll see what happens. Like I said, work to do here at this congestion level, but something to keep an eye on as we move along in the year. And then semis are obviously the area of the market where we pay a lot of attention. VanEck Vector Semiconductor ETF relative to the SPY, consolidating a strong move. We've had this strong move starting in May, right? This was a big driver of our review on the market. And now after that strong move, we're consolidating, so far holding support above a rising 200-day moving average, RSI holding bullish ranges, and here's semis on an absolute basis, just a nice steady uptrend. So this is a leading area of the market that is consolidating. And just wanted to mention once again, we are offering a 14-day free trial to Chaikin Analytics. Head over to www.chaikinanalytics.com/test drive, where you can sign up for that free 2-week trials. You can see a lot of what I'm talking about on this show, right? When we talk about identifying bullish and very bullish stocks from leading areas of the market when they become oversold with bullish money flow. You'll be able to run through that analysis if you take it for a test drive. That is going to wrap us up for today. I hope you all have a great 3-day weekend. I will be back here with you on Tuesday. Happy Friday, everyone.